Tim Seymour, I want to begin with you because really today was kind of a China story, and I mean it like this. Apple, that stock there up 5%. iPhone sales jumping 2.5 million in March versus 500,000 in February. Better import-export data. Did big cap technology today, to you, sort of signal that China is providing a kind of roadmap for our reopening, or was it just something else?
Well, it has. And if you think about also when, a couple weeks ago when we started to get China data out of Nike and Starbucks, it was also a catalyst for markets. So look, this iPhone shipments data in China, of which 2.5 million is Apple's of the 2.9 on the international sales, was very bullish. The question is this pent-up demand, or is this a sustained dynamic you're going to see into April? But it's clear. You talked about the China macro quickly. Imports, exports last night were much better than expected for March. So imports were actually almost flat on the month. They were expected down 9.5%. They came in down 0.8. Exports were down about 9%, better than expected. So this is what the markets are trying to do with Asia as a region to interpolate what's going to happen over here.
Yeah, Guy, was this kind of the optimism for a maybe mid to late May reopening trade? And if it was, and if it's not, tell me what it was. But if it was, and we don't get that sort of soft reopening, what then?
And then it does become a sell the event type situation. Listen, first of all, kudos to Tim. He's been steadfast on this pain trade being higher, and that's been the case. I thought this thing would stall out around 2790 in the S&P, and obviously we've blown right through it. There's a lot of optimism out there. Another week of this, you had the NASDAQ's at an all-time high. I'm not quite certain what everybody's looking at. If you look at Wynn Resorts to sort of dovetail the Apple story, that was up 7.5% today as well. So maybe people are definitely extrapolating. Again, I'm hard-pressed to believe it's going to be this simple in the environment that we find ourselves in. I take some encouragement with the fact that the VIX is now significantly below 40. The bond market has absolutely quieted down, which is encouraging. And you have this move in the Russell to the upside, which is sort of this stealth thing as well. I just don't understand how this can continue at the arc and at the trajectory that we've had over the last couple weeks.
I am right there with Mr. Guy Adami, Steve Grasso. Listen, we're looking at the data. The number of, I think it was, cases and or fatalities today was a record high. There are 17+ million people unemployed. Millions of small businesses are at risk, and yet the market has been powering through like this was 6 weeks ago before this all happened. Is it because we're looking to the other side? We're discounting it, or is it literally all because the Federal Reserve is throwing so many trillions at it that there's nowhere to go but up?
I'm going to say yes to that. So it started off with the Federal Reserve last week throwing multiple trillions at this, unprecedented amount of money, and then it's the economy or the investors looking towards the other side. So it's not about the number 2.5 million iPhones. It's about that it's 5 times the amount of what it was in February. If you look at it that way, this is the back to work bounce. So the market's going to be hard to be sold in the next 45 days. Simple as that. But if you want to sell the market, you wait for the second wave of infections and when the rubber really hits the road as far as earnings or lack thereof of earnings. But people are taking money off the sidelines in record amounts. I should say money on the sidelines in record amounts. The worst since 9/11. They have to put it to work someplace, Brian. So where are they going to put it to work? It's going to be in these technology plays, the growth plays, the value plays. Their day hopefully will come. But right now it's at this large cap tech looking out over the abyss into what might be on the other side.
And that's what's so vexing, Dan, Nathan, is like, listen, I've just been sitting in for Melissa for a while. I know she's coming back soon, thank goodness. Everybody's saying thank goodness, especially the audience. But, you look at this and I think, look what was up today. The MAGA stocks, the FANG names, Tesla. It's like, whoa, what is this? Early February? Did the whole thing actually occur, or just people just buying the same stocks, and I almost said something else, that they were buying before as if nothing has changed.
Yeah, Sully, this is one of the dumbest you-know-what things I've seen in my 25 years in the business. I get what Steve said. I get what Tim has been saying for weeks now and trying to be constructive on the market, looking at the other side of this. But I think it's really important to think about what we're doing here. We're looking at the worst health crisis in a century. We're looking at the sharpest market decline in a century. We're looking at the highest jump in unemployment in a century through the lens of the stock market in little less than 2 months in a 35% peak to trough decline. And I just don't understand how, if we're about to go into, or if we're not already in, the deepest recession that we've been in a couple of decades, that this makes any sense whatsoever. The fact that they are buying the same things that they were buying when we were in Looney Tunes land about 6 weeks ago doesn't make me feel any better. That being said, I get Amazon. I get the MAGA trade, okay? I get Microsoft, I get Apple, I get Google, and I get Amazon. I mean, really what they're trying to do there, they're going for monopolies, they're going for moats, they're going for balance sheet, and they're going for just this this safety trade. But bringing it back to Apple, okay, 2.5 million iPhones. There's 1.5 million installed base iOS globally. It doesn't move the needle. It doesn't really matter. Steve's point is it's 5x February, but Apple is number 5 in market share in China in smartphones anyway. They are losing share. You know, the Information had a great story today talking about WeChat is a huge problem for Apple in China. So when I think about what's going on there, you know, Apple up 5% on that data. It's not like it's particularly oversold and sentiment was so bad. I would not be buying Apple on that. I would not be buying the market here either.
Yeah, and we got to make these are good points. And Tim, we got to make this clear, okay? I know you know China. I've been there a few times. The iPhone is a rich person's toy in China. Let's be clear. It's not like here. I know it's expensive here, but the reality is iPhones are pretty ubiquitous. An iPhone in China costs effectively the same as it costs here, with an average income in parts of the nation of $7,000 to $10,000 US a year. Is it a good read on the economy when things reopen, or are we going to rush out and buy iPhones?
It's relative to itself. So the market's just trying to get a basis for where Apple sales have been, and that's what it's trying to do. Remember, this is a market that for the first 2 months of the coronavirus in China, we were indifferent and we were going to all-time highs here. So what we were trying to do was compartmentalize it and say it's only an issue there. Well, now the reverse is happening, right? The market's saying, hey, look, China's coming out of it. And although we all know there's a lot of pain here, and boy, if you listen to Jamie Dimon and the banks today, they told you it was going to be a lot worse than the market's telling you. But that's all today is. And I'll simply say that, Dan's making a decent point. Look, at 285 to 300 on Apple, when 320 was the all-time high and was arguably a blow-off top, up 90% from June of 2019, I'm not sure you have to chase Apple here and now. I do think that you've gotten to a case where people have seen this massive amount of liquidity thrown at markets. And that's really what this is, folks. Because it's hard to get excited about Apple at 20 times forward earnings, because we were complaining about that in December, November. I know I was. So that's kind of how I feel about today.
Yeah. And Guy, no one's knocking Apple. We're just making a point that it feels like when you look at the tape today and you look at Amazon and Netflix with a new high and Amazon moving up and Apple and Facebook and Tesla, it feels like people just kind of defaulted to what they know. But maybe what they knew, the stocks that worked pre-coronavirus or PP, pre-pandemic, will also work PP, post-pandemic.
Yeah, I mean, but a lot of these stocks were working on basically multiple expansion. I mean, they weren't working on earnings growth or necessarily revenue growth. And the market's falling into that same, dare I say, trap. And I don't want to say that we've been talking an Apple in a vacuum just today or the last couple days. We had actually brought up a couple weeks ago that when Apple traded down to that, I think, 230 level, we pointed out that if you go back to September of 2018, that's where the stock topped out at. So in terms of technicals, it's done everything right. I'm with Tim and Dan and probably Steve on this one that, if you've caught this bounce, which maybe a lot of people have, there's absolutely nothing wrong with taking some money off the table. If Apple goes racing back to new highs, it speaks volumes as to the inconsistencies and maybe sort of the price undiscovery that the Fed has created more so than fundamental analysis at this point.